Hi, this is Randy Finney with Right Side of the Chart, and today is Monday, June 1st, 2020. In this video, we'll take a look at the commodities, primarily the agricultural commodities. Time permitting, I'll hit on some of the other hard commodities. The ag commodities are soft commodities. Those are typically anything that's grown. You have the oil, things that come out of the ground like oil and metals, and those are considered the hard commodities. But let's just start here. Time permitting, again, I'll get to some of the other ones. I'm going to go through these in no particular order. In other words, not in order of my favorites, but I just have a watch list on another monitor sorted by gainers and percentage gain today. And so that leads us to BAL, which is a cotton ETN that's up, about 4.5%. It's rallied into resistance, so I can't make a screaming case to buy it here. In fact, TA 101 says, you book profits or, if you're long at resistance or wait for a breakout. And it's trying to pop that level, and it may do so. This chart, again, I can't make a screaming case from what I see with the indicators. I like, it's not necessary, but I like to see these divergent lows right there. We had a divergent low, then we had a breakout right there, and that led to this whole rally there. We had back here a divergent low, hit that first target, and that was it. But we got a nice, little bit out of that, I should say. Now let's look at the longer term chart here. Let's go to a weekly chart of cotton futures. BAL, that's the ETN we were just looking at. So this one is more of a wash, rinse, repeat kind of thing. We have, let me change this arrow to color. Let's make this arrow black. I look for these divergent lows. So right here, you can see in cotton. So again, weekly candlesticks, goes back about a decade here. So you had positive divergence there on the PPO. Here, let me do this. Let me bring the RSI down. Okay, that's a little easier to see. All right, so some of the things to look for are these divergent high. Sorry, not divergent. We're on the RSI overbought readings. Typically, now overbought can and often does become more overbought, but then it marked a major top there, and then we became oversold there, and we had positive divergence. So you look for these kind of things. The divergence here, we had positive or negative divergence on both indicators, RSI and PPO, and that led to a sharp, really this, the initial drop, but we didn't bottom till here. And like always, I always say that divergences are not buy and sell signals, but they are an indication of a trend reversal is likely. In this case, there was your sell signal, break of that clean trend line, and you could see that started the party. We ended up with positive divergence at this point, led to this rally, which ended with negative divergence. The same stuff, wash, rinse, repeat. There's a line right there, a little divergent low, led to that rally, divergent high, correction. And now we've come full circle. We don't quite have positive divergence on the RSI. Again, this is a weekly chart of cotton futures, but we do have coming off oversold readings, just as we were right here. We had oversold readings back there and back there. Sometimes it's that one and done. And again, we don't have the divergence on the RSI because we made a slightly lower low, but we do have the positive divergence here on the PPO, just like we had just on the PPO back here, and that led to that nice move. So there's a longer term case for a long position in cotton. Again, I can't give it a hard buy right now because I don't see a breakout of a well-defined pattern. It's at resistance, more of a trend thing, maybe you layer into. And again, the whole point of this video and all of these videos is, different trade ideas. Spread your eggs around. Don't put them all in one basket. Use asset allocation, which means putting money in different asset classes. Stocks are one asset class, bonds are another, commodities are another. And then within the commodities arena, we have, cotton, which we're starting out here, has nothing to do with soybeans. So they can have completely different charts and technicals at the same time. All right, next one up would be, let's go to NIB. NIB is the cocoa ETN. I know there's a lot on this chart. Let me turn off all the trend lines here and show you what I'm focusing on. NIB, or cocoa, is clearly in an uptrend. You can see back here, the trend line I had drawn right here is this trend line, and we started the uptrend back here, got a little steeper. So it's not we don't have a well-defined trend line at the top. In fact, we had a big run up here and then a drop, but we've clearly been making a series of higher highs and higher lows from this point, and that is the definition of an uptrend. So the story on NIB is another one where you're in an uptrend, and I did highlight it, I believe, back here a few weeks back, a couple months ago. That is the most objective time to buy. So when you see a well-defined trend line like this, the MO is to buy pullbacks to support. That's an objective long. Is it objective here? No, not nearly as objective as it was back there. But again, I wanted to point out it's in an uptrend and do a follow-up. But from time to time, I'll always update the commodities, bullish or bearish, and I've been liking those. I think the risk-reward profile is much more attractive than the stock market right now, on these guys. And again, you have to be selective. You can buy, and I'll get to some of the one-size-fits-all commodity ETFs. But if you have the time and the capital to do so, I like to allocate more money to the most bearish ones, or if you're short, the most bullish. More money to the most bullish looking charts on these commodities, or if you're going to short, the most bearish looking charts. And again, you can use the ETN or futures. Oh, and back to that. As far as targets, I'm looking at this as just a trend trade, an investment. You could, there are some levels marked here. I haven't updated this chart in a while. You could, tactically try to, get in and out on these levels. But I'm talking more, looking at this one more as a core holding. In that, again, a little piece of pie in the portfolio. If your portfolio is a pie like this, you have these little slivers, and how much do you want to commit to, let's say, commodities. Let's say it's 25, 35, 40%, whatever that number is of your portfolio, and then within there you're going to have other little slivers. How much of that will be into, in this case, cocoa? How much will be into crude oil or whatever else you're trading? So that's how I'm looking at this. I just want to share that it's not a I don't have a hard buy on this one right now, but it is in an uptrend. And when we look at the chart of the futures, I don't have this one annotated, but you can see these are cocoa futures. This is a weekly chart. It goes all the way back here to 2010 to the left of the chart. And, we were in a downtrend there. We were in an uptrend there, downtrend. And you can see, just like on the ETM, we're clearly in an uptrend from this point. Like I said, there is that one. We did have that run up, and there's that previous reaction high, and that's a level to target. And if we get there and we break out above it, I would put a horizontal line there. That could actually lead to quite a bit more upside. So, you buy pullbacks to support, and with a stop somewhat below that trend line. How much below all depends on where you bought, where your entry. The closer you are buying to the trend line, the more room you can give on your stop above it, below it, I should say. Coffee. This is probably one of my favorites at this point in time, and I may add this on as an official trade here shortly. I'd probably wait. I would like to wait and see a little follow through to today. I think it is objective. I took a position in coffee. I plan to add to that if I see some more upside, and I'll talk to you about why. Let's look at this chart. So this is JO, the coffee ETN, and you can see that it's just been a great buying opportunity every time it's pulled back to this 3068 level. We've had numerous, every time it's done so, it's either been posted as an official or unofficial trade. Again, it's more about just getting the post out there and identifying all the price targets. But it's not just a pullback to support. Each and every time we had positive divergence. I don't know why this line wasn't extended. There it is. So we had a divergent low at that point with the bullish divergences. We had a divergent low here. Again, you can see your positive divergences. We had, again, last time we hit there, positive divergence, and that was good for a very quick gain. At that point in time, we hit that same support level, and coffee exploded up 33% in a matter of, well, it was like a week or so there. So it's simple stuff. Not to oversimplify it, but it's wash, rinse, repeat. There's no guarantees it'll work out, but you step in, you buy at support with a stop a little bit below. Now, what happened this time is a little bit different. I may have talked about this recently, about this happening. That was the potential for a false breakdown, aka bear trap scenario. So yesterday, or Friday, I should say, we broke. You had that red candle. We broke below there, and now we've reversed, and we're trying to regain that level. I mean, technically we're above it, but not by a wide margin. So I'd like to see some follow through tomorrow, because what happens when you break support, you get the shorts that pile in saying, okay, 3068 was a very well-defined support level. Then when they, if coffee reverses and gets clearly back above here, you have those shorts start to get squeezed out of their position as they quickly, get underwater on it. And then, of course, when that happens, the other thing is longs tend to pile in. Maybe they were watching, like me. I'll wait. I'm going to add to this if I see more upside. The more we go up, the more clear it becomes that that was a false breakdown and a successful defensive support, even with that brief, one-day whipsaw. So that's how it looks. And in this case, and in many cases, you get the tail wagging the dog. I don't know if that's the case with Joe. What I mean by that is you always want to look at the futures. Let me grab my coffee futures here. Let's look at this weekly chart here. All right, these are futures, and I always look at the futures when trading the ETNs or posting those as trade ideas, because that's, really the ETNs and ETFs came out long after the futures were there as a way for investors to access, those that didn't have a futures account. And what happens in some cases, you have things like GLD, the ETF. It's massive amounts of money in GLD, as an example. And so you have these inflows when investors are buying, money's coming into GLD. That ETF company turns around and buys gold or buys the futures on gold. And likewise, when there's outflows, everyone's selling their GLD, it's going to put pressure on gold. So that can happen here with these ETFs. So I like to look at the charts of both. And when I look at the charts of coffee, and again, this is longer term because we're on a weekly chart, you can see here we had divergent low back there, and that led to this rally, divergent high right there, correction, another divergent high correction. You can see all these are marked. Back here in about April, I pointed out this setup here. We first had here. Well, let's take a look. I think I have that chart here. Hold on. Okay, this goes back to May 8th, 2019. The lower left-hand corner here in the chart. You can see this was posted on the site. And we had nice, clean, bullish divergence again on the weekly chart. Last time we had it was here. The last time before that was right here. And those were big runs. And just like these, divergent highs were good for very profitable shorts. So I pointed that out. I laid out a few targets. And then I did a few follow-up posts. Let's look at that. Okay, and then after that, later that month, May 24th, posted we had a confirmed breakout. That's our buy signal, and then June 6th, additional confirmation. We're still moving up. Reiterated targets. After that came this one here, added additional trend line there. So if we get another impulsive or on watch for an impulsive break and or weekly close above this downtrend line for the next buy signal, and still had plenty of meat on the bone. And then finally here it was, and we hit that target. This was December 17th, almost a perfect tag of that first target. Now the point of all this is to kind of, to find out, to figure out where you're going. It sometimes helps to see where you've been. So effectively what that was is a hit of the first target. And the reason I list multiple targets is each target is a level where a reaction's likely. So that was again back in December. Let's close all these charts out and go back to the current chart. And so you see perfect tag, and we pulled back. And so because of the long building positive bullish divergences down here on the indicators and everything else, my preferred scenario, or still is at this time, is that was the initial thrust up with a corrective wave, and we'll likely get a next thrust up heading up there. So like I said, right now on this chart I can't make a screaming buy signal, but again, based on what I just showed you on JO, and again this is a daily chart. A minute ago we were looking at the weekly chart. I can make an objective case here, and it'll be again just a little bit better. Play it safe. These commodities sometimes have you get these failure to launch kind of rallies, but see, the thing about coffee too is you don't want to be late to the party. Unlike some other ones, when coffee wants to run, it can really run. You had the breakout back here. if you didn't jump on it, this thing went up, double digits in just a few days. You can see coffee tends to have these explosive rallies, and again, if you stepped in at these pullbacks before, if you waited a week or so, you missed most of the move or a good part of it there, or in that case, all of it. So that's the one I'm watching right now, and maybe an official trade tomorrow. Targets, I'll work on those. I'll have to work on the targets for you. I didn't have those laid out here for the video. But again, it's something you get in, and if it, I'll follow up on it whether it works or not. And here's KC Coffee Futures. We had this. I was highlighting it recently. We had this trend line, and then that was broken. That's what caused this leg down here, and that's also that part of this. This is a 60-minute chart. That what could prove to be a whipsaw signal in JO. So, like I said, a little more upside would help. Especially to get that, clearly regain that level on that daily chart of JO. Would also be nice to get back above this level here. So maybe, partial position here and add on if and when. I should put a line right there. That's about the 105 or so level there on coffee futures. This is CUT. CUT is the one of two timber ETFs that I track. The other one is wood. They're basically both at resistance, and they are not, to be clear, unlike every other one that I've gone through or will go through in this video when I cover sugar, soybeans, those ETNs track sugar and soybeans via the futures. In the case of CUT and wood, they do have lumber futures, random length lumber futures, but these ETFs don't track it, and to the best of my knowledge, there is not one that tracks wood prices directly or lumber prices. So these are, they track timber and forestry companies, International Paper, those kind of Kimberly-Clark, companies like that make, paper products. And so, and of course they will, I've overlaid the charts, it mirrors the, lumber price is pretty good. I just want to mention they're at resistance, so I can't make a case to buy them here. They've come back quite a bit off the lows, and don't have a strong opinion, but I wouldn't step in and buy right here at resistance where we're not overbought yet on the daily time frame. But again, this is probably going to trade more in line with the stock market, because if the stock market continues to hold up, or even if it continues to rally, then the housing market will probably do better or hold up. And if the housing market holds up, there should be an increased demand for lumber for construction. SSG, sugar. Sugar was an active trade recently. We hit the first target quickly, T1, and that was back here actually. And then it's been moving up since. After hitting our first target, it went on to have the stop taken out on a stop rate of 1 day. Even if I had it on a daily close below that level, it still would have been taken out. But again, so that stop in hindsight was a little too tight, but again, I like it. I pointed it out afterwards. I actually liked it even better at the after the stop, because we had this nice clean bullish falling wedge pattern. This is your divergence line there. There's your positive divergence. There was your downtrend line, and there was our breakout candle right there. Went up, hit this level here, went up, hit that T2 level again right there, and we've been stair-stepping higher. So next target here is 40.47. There's makings of an uptrend, higher lows and higher highs so far. And then ultimately we had a T2 on that last trade, and that's still a potential target all the way up here about 47 if that's hit. So again, the takeaway as I'm doing this video is the majority of these ag commodities, although some may be in longer term downtrends, or maybe trading sideways for a while. However, most of those that I'm covering are in near-term uptrends. That's what I want to recognize here. So, the ideal, if you don't have a very hard entry point, pullback to support is always an objective entry, or even just a pullback within the uptrend if you can't. Ideally, I like to buy pullbacks to support or breakouts above resistance for the most objective entries. But sometimes there's other things such as bullish and bearish candlestick patterns and gaps that are backfilled. You could step in. Of course, that's a support level in itself if you have a gap being backfilled. But all right, next up would be Cane. Cane is the other ETN for sugar. There's just two different companies, and on this one, we have we do have the bullish divergence, or had it, I should say, at the low, which helps to make the case for a rally, which so far we've had. Again, this is our divergence line right here. There's a positive divergence. And then we also have the makings of what may be a inverse head and shoulders bottoming pattern with the, here, I'll draw it out for you here, with this being a left shoulder right there, this being the head, and this being a right shoulder. Nice and very symmetrical pattern too. It's perfectly normal. In fact, I'd say more than normal to have a downward or upward sloping neckline on these patterns. In this case, a downward sloping line. We're in a downtrend. Sometimes you have a flat neckline. And actually, since I started the video, it looks like earlier today, I don't think we were above there. It looks like we're popping above the neckline. So that is a breakout. Now we could tweak this. No, I'll leave it where I had it. I like this this draw right here for the neckline. And so there's a breakout. It's somewhat impulsive. And again, another one that I like. And the bottom line is, again, it's in a near-term uptrend right now. And today's high right here slightly took out that previous high. So that's one option. Again, SSG is the same, tracking the same thing as tracking sugar. GCC, that's a continuous commodity index fund. This one will have crude oil in it as well, and actually it has a pretty big impact, crude oil, natural gas, whereas I'm going to get to another ETN, a couple others in a second here. There's copper up against resistance, recently just hit resistance. DBA, this is an ag ETF. I've highlighted this one in the past. Kind of a one-size-fits-all. If you just want to trade our own agricultural commodities and you don't want to own crude oil, natural gas, or any industrial metals, in other words, just the ag commodities spread out there. And a nice clean breakout so far. It's not it's not really taken off, but it's still above the breakout point. There's our bullish falling wedge pattern, positive divergence, and breakout candle was right here. We rallied up, we pulled back. What I've added since the last update is here is a support line. Not super well defined because we traded through it, but there's enough reactions on it to watch it. So 1349, and I think it's objective to buy pullbacks on or even near, even where we're at now. If you really zoom in a little tighter, you can see here we have this kind of this little area of consolidation recently. So I think if we can pop above that, bullish, near-term bullish. If we can take out this previous reaction high on this candle here, obviously that's bullish as well, and that should open the door for a move up there to my next target at 1467, and you can see some additional targets. Downside break, certainly not going to be bullish. Will it take us down to new lows? Maybe. We'll see. But again, if you collectively look at all of these charts within here, which is what I'm doing in this video, the majority of these seem constructive right now, so I favor upside on this one. USO, crude oil, big old gap right there, very significant. We hit it about a week, 2 weeks, a little over a week ago, week before last right there on the 21st of May. Perfect test of the bottom of the gap. We're still below it right now. I don't have a strong opinion. If anything, I'll probably cover that in another video. No, I'll do it now since I brought it up. Where's my crude oil chart? CL, this is a 30-minute chart. We're diverging, so we might have a short trade coming up here on crude soon. You have this negative divergence right here. We've had smaller divergences and wedges within this uptrend. That was a divergent high correction. We had another little wedge here, divergent high as well. You can see those are the divergence lines at the time, correction. And these are big correction. Crude has been, the swings have been tremendous. For the most part, I've stayed away from it, from the official trades, because it kind of broke, a couple months ago when crude futures went negative. And since then, it's been a reinflation trade with the economy opening up. But I just showed you USO at resistance, and here's crude futures. And you'd want to watch this trend line here. Break of that trend line would probably trigger a drop down here to that 3096 support level. If that goes, next support or potential target 2775 right there. And then things get really ugly, 2436. I think it'll take a reversal in the stock market and a pretty healthy correction to get crude all the way back down there, because that would be a drop of about 30% if so. But even these other two targets, plenty of meat on the bone for a short trade there. All right, next up. This is soybeans. Soybeans looked like they were trying to break out the other day. It had a breakout candle and it never stuck. once again, these are the ETNs. They do a good but not perfect job of tracking the futures. So we'll take a look at soybean futures. But there's our pattern right there. It's been building divergences for a while, especially here. These are probably, I'd focus more on these smaller, more recent divergences right there. Divergent low, positive divergence right there. It just needs to take out this trend line with conviction. And let's look at soybean futures. As to loop back, as I was pulling my charts, I realized I may have had that CL chart cut off. So there's the full view of CL. If you didn't get to see it before, if I had it cut off, let me find soybeans for you. Okay, here we go. ZS. What I'm looking at, we're on a 2-hour chart. So every candle represents 2 hours of trading instead of an hourly. There's 6 months of trading history here. And what I'm looking at is I draw it this way. Here's the potential for a bullish falling wedge pattern with positive divergence. Now we don't have the positive divergence yet. This is only potential. Why? Because here's our previous low. We need to come down, run at, test, or slightly undercut that low and then reverse. Either way, whether we do that or not, a break above this trend line should be a go, should be a buy signal. It's not the best to find trend line. We do have a few reactions here, a couple there, and we pretty much came close right there. But you can also look at boxing it in here. We have a horizontal price resistance level, even a resistance zone. But so here's the thing. I think 855, 519ish should do the trick, because that'll take us above both the trend line and that this recent trading range here. You know, you can see we've been chopping around sideways there. So that would be a buy signal on soybeans. And again, going back to the chart. First target, if you're trading the ETF or ETN in this case, 1419. Next target, I'll probably have an intermediate target somewhere around here, and then up there to 1474. And here's a longer term downtrend line to target. So I'm looking at this like a lot of these is more of a longer term swing or trend potential, longer term swing or trend trade. If we work our way up there and ultimately break above, that would be quite bullish. And you can see these are additional longer term targets right there. So plenty of potential upside there on soybeans. And again, these are commodities, so you know the nice thing about them, doesn't guarantee they can't fall, but what I can guarantee you is that soybeans are not filing for bankruptcy protection like so many companies lately. That's been an increasing trend. You know, the Fed supporting the stock market as aggressive as they ever have in history, keeping the market up, but the trend has been economic indicators crashing, more and more companies filing for Chapter 11 bankruptcy from the fallout, and that trend is going to continue for at least some time. It could be could get worse, may abate, who knows. But again, these are, like I said, commodities. But you can lose money. They can go down. Zero is the bottom on it, you know, technically speaking. But they're not. In reality, they're not going to go to zero because there's always going to be a demand for these things. Okay, JJG, that's a combination. It tracks three ag commodities: corn, soybeans, and wheat. And this one's just set up in a nice, clean, bullish falling wedge pattern. There's a well-defined downtrend line. There's your divergence line, positive divergence. Wash, rinse, repeat, just like you had here. It's a falling wedge. Here was your breakout candle. It was impulsive, which you want to see. So that was a check mark, and we had a nice pop in JJG in the grains. Right there again, an impulsive breakout candle, little rally. Nothing huge, but a swing tradable rally, and here we are, you know, again. So there's a potential trade there, and again, that will give you a one-size-fits-all for those three ETNs, or I'm sorry, those three particular commodities, just the grains. And speaking of those, here's wheat. Wheat's at active trade. Targets are up here. Still looks good right now, and I've covered that quite a bit. Let's take a look at one other chart here for wheat. These are wheat futures, ZW, and so what stands out here is you had a nice clean downtrend line right there, and back here you had a divergent low. So that was so far we're moving up. These are pretty big divergences. They've been building for a while, and we started moving up. and we've been stair-stepping higher. Here's your uptrend line. So now we broke out of this trend line. So this is the this is still an objective entry, although at this point you're kind of in no man's land if you really zero in tight. No man's land meaning between support and resistance. That's what I like to call it. We have resistance right here, maybe a little bit above that 520 level, maybe 521 or so, right there. That's what's checked the last couple advances, and as well it goes back in time. You can see that level has acted as support and resistance for quite some time. So a pop above 521 should be the catalyst for a move up here to 530, that's about 540, and then ultimately I think up here at about 557 after a reaction there. So that's what I'm looking for, something like that. Kind of drew it a little sloppy there, but thrust up, correct, pull back, move up there. And as far as objective long entries, besides a breakout of 521 or those recent highs right here, any pullback to this trend line as well, or a back test to this trend line here. So pretty much down here, stop somewhat below if it doesn't work out. That would be below both trend lines there, and you have some reaction lows there. So that's wheat. And another grain is corn. We have divergence right there. We had a divergent low. We entered last time, went a little early on that one. That one looks like the stop was hit, and but it looked even better at the lows recently. It's broken out, but not very impulsive buying so far. It is moving up, and it is above the downtrend. It was a pretty clear downtrend line. So I still think we work our way up here to that first target from before, that downtrend line right there in corn, and then enter all of these targets. So I think it's objective here. You'd have actually, that's the last trade. Stop somewhat below, and let's see if there's any more. Yeah, I hit on crude oil before, so I'll just hit UNG here. This is a natural gas ETN. Positive divergence. That's not a buy signal. We've been in a downtrend, but it is to be on the lookout for a trend reversal. I think a likely target would be this 15-ish level. We hit several times there. Let me see if that reconciles with the future. Yeah, if the futures rolled, I don't have the chart annotated. I'll have to look at that. Nothing jumps out at me when I'm looking at this chart. I'd have to annotate it, so I'm not really crazy about NG right now. It's just kind of been floundering around. Another one, if related to crude, would be UGA, which is a gasoline ETN. And that one, like crude, there's a big old gap right here, just like USO has. That is contending with, and in fact the stock market's also contending with big old gap resistance right now. A lot of sectors and indexes. PPO is poised to make a bearish cross, a high level bearish crossover. So my guess is we're going to get a pullback here. How far? Not sure. We could probably draw a trend line. Again, that's not one of my favorites, but if we do get that correction in crude oil, this one should follow to the downside. And that is it, guys. All right, let's wrap it up here. Those are some of the ETNs I'm watching, particularly the ag commodities, the ones I like right now that stand out. And already posted updates on gold and silver today, so that pretty much covers the whole commodities arena. I'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.